welcome. Hopefully we're not too tired. We've all had some coffee and ready to go. So anyone who's in fintech, obviously regulation is important. It's a necessary evil, if you will, for various reasons, and we're here to talk about what's happening from a regulatory perspective in Canada. I have some great panelists I'm going to introduce in a moment, but I'll just say I've been practicing law for a long time. I'm a partner at Blake's. For those who don't know me, I'm Jackie Shinfield, and I remember when the Code of Conduct for Credit and Debit came out, I think in like 2010-ish, and that was the first time there was ever any payment regulation in Canada. And I remember at the time it was kind of like groundbreaking. Oh my God, we're regulating networks, we're regulating acquirers, and now fast forward to 2024 and we're really deep into regulation, and we're about to get some really important regulation that's going to affect the payment industry that Carol's going to talk about. So without ado, I will now introduce the panelists, and we're going to sort of engage in a really interesting discussion on what's happening from a regulatory perspective in Canada. So first I have Carol Brigham, who's the Managing Director of Supervision at the Bank of Canada and is very involved with the Retail Payment Activities Act. And for those of you who haven't heard of it, it's going to regulate payment service providers, which is very broadly defined to include entities that touch money, that hold funds, that remit funds, that initiate EFTs, that have any role in the transmission of EFTs, or hold any account or personal information about individuals. So it's really broad, and it captures a lot of players in the fintech space. And then next to Carol, we have Hanna Zaidi, who's the Vice President of Payments and Strategy and CCO at Wealthsimple, who are doing a lot of incredible things in Canada and really lighting the way for other fintechs and setting an example of how things should be done. And then last but of course not least, we have Catharine Dutt, who's partner at MNP in Enterprise Risk Services. So welcome, panelists, and we're going to turn it over to Carol because Carol has a lot to say. So let's talk about, I'm not going to steal your thunder, you're going to get your own thunder. Let's talk about what the Bank of Canada is doing, and let's talk about the Retail Payment Activities Act, and where does this fit into the whole regulatory regime of payments and financial infrastructure generally.
Fantastic, thanks so much. Hi, everybody. So this new regulatory regime, it addresses a gap that we have in the payment ecosystem right now. So as many of you know, the Bank of Canada already oversees systemically important financial market infrastructure. So as an example, that would be links, and prominent payment systems, which includes ACSS, Interact Debit, e-Transfer, Visa, and MasterCard. And then, once RTR goes live, it's expected that that will also be designated as a prominent payment system. So, with this new regime that the bank will oversee the payment service providers, this allows the bank to holistically look across all the financial market infrastructure, whether they're small retail or systemically large. And this is great because we can look at it holistically, and you can imagine a time where a payment service provider could become a prominent payment system, or vice versa. So the expectations that we have for systemically important and prominent payment systems, they're broad and they're comprehensive. And this is because of the risk that it brings to the Canadian financial system. Whereas the expectations that we have for payment service providers, they're more narrow, and they focus on operational risk and end user fund safeguarding. But this is also appropriate because it's based on the risk that it brings to the payment system. So, so those are two aspects of the regulation. But of course, we also have banks and credit unions that are very involved in the payment ecosystem in Canada. And because those are already overseen by either OSFI or provincial regulators, they're exempt from the RPAA. So I like to think of it really as if you're looking at a payment transaction, and that payment transaction could start with a PSP initiating a payment, and it could flow through to a bank and then maybe another bank and then finally a payment service provider, and then it's cleared and settled by a designated systemically important financial market infrastructure. Now, each leg of that transaction is going to be regulated, a PSP by the bank, the banks by OSFI, and the clearing and settlement systems, which are already overseen by the bank. So this really should bring confidence to Canadians that every aspect of that transaction is now regulated.
Right, so now the payment chains, basically, because the definitions are so broad, it covers anyone who's moving the money or involved in moving the money or holding data or moving data or clearing or settling. So you're going to have a lot of organizations that have never been subject to any type of safety and soundness legislation that now are going to be within scope. I've read you're expecting about 2,500 companies to register.
Well, I have an update. So now we expect between 3,000 and 3,500. Yeah.
I don't know how you guys are going to oversee that. Okay, so let's talk. So the legislative scheme sort of comes in phases, with registration happening in November, and then in September of 2025, the legislation comes into force. So what should, companies that are going to be PSPs expect when we hit 2025?
Yeah, perfect. So maybe just step back and remind payment service providers. If you are a payment service provider, or you think you might be, there is a lot of information on the Bank of Canada website. It goes into details with respect to scope, so whether you're in or not, and if you are, there's a lot of information on what you need to do to register. And registration is this year. It's November 1st to November 15th. So you've got those 15 days to register. But then, starting, then once you've registered, we have 10 months to review those applications, and September 8th of 2025, we will be publishing a list of those payment service providers that are registered under the regime. And starting that day, you need to meet the expectations that I mentioned on operational risk and end-user fund safeguarding. So this is what I'll say. In those 10 months, you should review those guidelines, and ideally, if you do a gap assessment against those, and maybe you identify 10 or 12 gaps, and you put a plan together, and by September of next year, you've addressed half of them. But you have a plan to address the rest of them. Well, this regime is all about promoting compliance. So you're good. We'll have a discussion with you and agree on some timing, and we'll follow up to make sure you've addressed those gaps. But really, it's about starting that conversation. This is a registration regime, so you have to register, but you kind of come as you are. And then after November, you can start working on addressing any of those gaps that you have. But if you are a payment service provider and you have gaps, and you're not addressing those, then the bank has a number of other tools that they could use, including enforcement tools that include notice of violations or financial penalties. So, it's about promoting compliance. You can either do it proactively, or we have other tools that we can use to really make that happen.
Yeah, so the bank's going to be a cooperative regulator, but they sort of want you to play ball. If you're trying to hide in the shadows, they'll come find you. And the registration regime, which does start in November, and it's a 2-week registration regime, for those of you who haven't been on the bank's website, there's really detailed information. There's actually a step-by-step registration process, and I would advise anyone who is potentially a PSP, well, 1, to figure out if you're a PSP, and 2, if you are, to go through that registration guideline. There is a lot of information the bank is asking for, and it's something that you you won't be able to come up with at the snap of your fingers. You're going to have to take time and prepare. So it may take you a month or so to get ready to register. So don't wait until sort of November 1 to go, oh, it's time to register, because you need to have information on payments in the last 12 months, broken down on a month-by-month period, on fund safeguarding you've held for people in the country or out of the country. If you're Canadian, there's all kinds of requirements. So please go through and look at them and get yourselves comfortable with what's there, because it's not going to be something that you can do really quickly. So that's really helpful, maybe a little scary, but you're going to be a cooperative regulator, so we're going to take some comfort from that. And now, talking about PSPs, I'm going to hand it over to Hanna, and I'm going to say Wealthsimple is really a shining example of Canadian fintechs. You guys have done a lot in all kinds of areas, and you really have had a journey. And let's talk about how you've ended up where you are, and how do you see yourselves in this market?
Yeah, so thank you for the kind words, Jackie. Maybe to talk a little bit about the journey. We're celebrating our 10-year anniversary this year, and we started as a robo-advisor back in 2014. And really from the get-go, in terms of our DNA, working really closely with regulators to do innovative things. So we registered with securities regulators across all provinces in Canada, and then in 2017, we got approval for something called a no-call model, where portfolio managers don't have to individually call you to onboard onto our platform. You can digitally create an account on our managed platform without having to talk to anyone. That was very innovative for the time, because it allowed us to scale extremely quickly and sort of explode. And then subsequently, we acquired a securities dealer that's registered under CIRO, which is a Canadian investment regulatory organization formerly known as IROC. And this is where the bulk of our business sits, and it's where we've been able to get really creative and innovate. So for the last 2 to 3 years, a lot of our payments, access to infrastructure has been done through that. So we're the first securities dealer to become a member of Payments Canada and actually use that to offer banking features to our clients and make money movement really seamless in and out of our ecosystem. And then following that, we obtained approval for a settlement account at the Bank of Canada for the upcoming real-time payment system. And then, just last year, we got, approval to become a direct participant of the e-transfer network. And we're building that innovation, on top of our dealer. And so, all this work partnering with various regulators has been part of our journey, part of our DNA. And then we also have a money service business that's part of our family of regulated entities, where we offer payment services as well, and that's where the Retail Payments Activities Act comes in. And a lot of the work that we already do when it comes to our dealer and our broader ecosystem, that's part of our enterprise risk compliance program. So safeguarding of user funds, where funds are held in trust and CDIC insured, operational risk frameworks, regulatory compliance management frameworks. These are all things that are already in place because we're already regulated across our ecosystem. And so, I think given our position and sort of our other regulated businesses, we're in a place of advantage to already be fairly far along in our ability to comply with the upcoming Retail Payments Activities Act. But happy to chat about, a bit more context on the broader ecosystem and how PSPs might be impacted. And
yeah, so let's talk for a sec about something
Sure.
important you said. You are an MSB. And now you're going to be PSP. And I find there's a lot of confusion. Some clients go, well, I'm an MSB, I don't have to be PSP. Or, well, I'm a PSP, I don't have to be an MSB. Why don't you talk about the differences and the distinctions and why actually you're likely both in most circumstances?
Absolutely. So I think, I chat with a lot of people in the payment space and the fintech space. And especially over the last few years, people have framed being registered as a money service business as, I'm a regulated entity, why do I need to go and now have to register as a payment service provider and be regulated by the Bank of Canada? And I think there's some, Carol already sort of alluded to it, but to be maybe even more explicit, like being registered as a money service business, you're registered with FinTrack, which is our anti-money laundering regulator, and what you're required to do is comply with providing reporting for financial crime intelligence. They're not in the business of regulating payments. So, for instance, if a company that is a payment service provider, they go out of business and they haven't properly safeguarded your funds, you lose your money. And there's operational risk challenges. There's no sort of recourse around incident management reporting. So I think this is a really important gap that's being filled in the ecosystem. It's also to bring us in line with other markets around the world that have similar constructs. I think the piece that might be missing in the story is like why we're doing this, in addition to making sure that fintechs and PSPs are compliant and safeguarding user funds, and there's like proper operational risk frameworks in place. This is also to prepare the ecosystem and fintechs and payment service providers for when payment access to infrastructure is going to be expanded. So there is work being done right now where the Canadian Payments Act will hopefully be amended to include other types of participants like payment service providers. Wealthsimple's already been a member of Payments Canada for the last few years. We've been able to build an entire service offering on top of this, and I would love to see other players also at the table to be able to do this as well. And in order to do that, you need to be registered as a PSP and have all the proper controls and compliance frameworks in place. And then once the Payment Act is amended, PSPs will be able to become members of Payments Canada. They'll be able to access the payment rails. So that's kind of like the full narrative. I think the challenges might be around like timing of like how soon that's going to be able to happen, but I think these are important, necessary steps.
Yeah, so the registration under the RPA is kind of admission, the admission ticket to get you into the RTR. You still are going to have to likely have other things to do and engage with the Bank of Canada, but that's sort of step one. If you don't have that, you're not even in there. So the idea is eventually we're going to have people participating in our payment systems that are regulated for both safety and soundness and for detection and prevention of money laundering. So that's all good, and that's really helpful. Thanks. And I'm going to turn it over to you, Catharine. So we have a lot of PSPs potentially sitting here and going, So let's talk about transition periods and how do we approach compliance day one versus future compliance, and how do PSPs get themselves ready to deal with the RPAA?
Okay, no, thanks Jackie. So I'm going to actually pick up on a couple of things that have been said. So what I would start with is that panic is probably not the way to go. Although when you look at it, and just picking up on something that's on the website, so to prep for this session, I did actually go on the self-assessment just to see, what do PSPs, or as Carol said, those who might think they are, what do you have to go through? And there's a pretty rigorous questionnaire there in terms of all the different nuance to get through to see if it even applies, and more importantly, to make sure that you may think it doesn't and it actually does. So I think that's probably the thing to do kind of pre-day one, obviously. And then the other thing I would pick up on, which Hanna was talking about, is that even if you're not, so I'm going to say there's a spectrum. So day one, you're going to be either an organization that has these frameworks and some of these foundations in place, like what Hanna was describing for Wealthsimple, or not. But that does, just because you don't have a framework that you would call that doesn't mean you may not already have some of those elements in place. You just don't refer to it that way. So this isn't unlike any other oversight framework. If you think about internal controls over financial reporting for those who had anything to do with that, it wasn't that there weren't controls over financial reporting, we just didn't call them that. So this is about going through and thinking about what's required, identifying what's needed that's new, but first identifying what you've already got, because chances are you've got pieces that you can weave into a framework, you've got things that you've already been reviewing and overseeing, you've got some obviously fine lines that you have to make sure you can put some check marks beside, so you work through that. But it's not necessarily always a build, it's sometimes identify what you have in place, think about what you need to do. And like Carol said, I mean, it is proportional. So on day one, it's also a question of saying, well, you know, what do I have that I can already demonstrate moving in that direction? And then let me identify what else is left and demonstrate moving towards it. So I don't think it's a case, and nor has generally it ever been, that everything must be in place day one. The reality is some of it's even going to evolve past day one. So when you see what others do is when you might actually think about different ways to actually build things out. So I would just say treat it as a bit of a, I'm going to call it a fact-finding exercise internally to see what you've already got. There are some components that you likely don't, and you just have to build, and there's no way around it. And then let the other processes mature over time.
Yeah, and anyone who's dealing with cards will be PCI compliant, so that you have to look at your PCI compliant framework and see how far that takes you, and you can leverage off things like that. Now let's turn to a practical side of things. What do you think the challenges are going to be for PSPs/MSBs, especially with respect to potentially needing bank accounts to implement the safeguarding requirements of the RPAA?
So I think so. There's a couple of things to that. So you know, one of the challenges, I'm going to call it actually a potential pitfall, is the overbuilding that could take place. And so, you know, there's minimum requirements that need to be met. We've heard from Carol already as to the purpose of them all and what the you know, call it safety and soundness type regime is that you're trying to comply with. So obviously that's overarching. But I think the overbuilding is going to be the question. I think as it relates to the safeguarding, the interesting part will be what those funds, what can be done with those funds. So as I was reading some of the commentary that was out there, there's a lot of questions on how can they be used? Do they, you know, if segregated and in trust, what can they be invested? What happens with them? How can they be utilized? I think that's going to actually bring potentially new entrants into the market for those who might actually try to fit that in either from a product perspective or an insurance perspective. So I think the challenge will be really understanding what's there, but understanding there will be new entrants into this market, I think, to deal with some of those aspects.
Yeah, and I guess from an MSB perspective, anyone who deals with MSBs knows that it's very difficult to get a bank account. So now, as a PSP, you also need a bank account, and not only do you need a bank account, it needs to be a trust account. And to have a trust account, you need the bank to acknowledge that it's not going to exercise any set-off rights. So on the one hand, this regime may help banks feel more comfortable about MSBs, PSBs because they're regulated, but on the other hand, you're asking banks to provide services to MSBs, and if they're trust accounts, from an AML perspective, you're supposed to technically identify your beneficiaries, and it's a very complicated matter. So hopefully there'll be some leniency provided, at least in AML regulations, to help banks. But you know, how do you help PSPs deal with those challenges? And is the bank doing anything to help PSPs get those accounts at all? Do you know, Carol?
Well, I wouldn't say that we're helping to get the accounts, but it's definitely something that we have heard. I would say there's kind of two areas that we heard from. When the regulations were out for public consultation, much of the feedback was burden. And definitely Department of Finance listened, and there are areas for reporting that have changed. But the second area is end user fund safeguarding, where I think there's still lots of questions. Obviously, the funds have to be segregated, and they either have to be held in a trust account or there has to be insurance against those funds. So, you know, we're hoping that the industry will innovate. And we've seen that in other jurisdictions. We currently don't have an insurance product. And so I think that there needs to be work between the PSPs and banks to really try and solve this problem. And to the extent that we can be supportive, of course we would be.
Thanks. And Catharine, how do you see these regulatory changes impacting new market entrants? And how do you envision the future for new market entrants coming here?
So I think, for established entities, the challenge is always having to implement all of these regulations, but still move forward towards what was business as usual, what the strategy was before these regulations were ever envisioned. So I think what that does is it actually creates an opportunity for new entrants who come in knowing what they have to comply with day one. So meaning opening of their business, they know what they're dealing with. So they only build what's necessary. And so like I said before, the pitfall is overbuilding. A new entrant doesn't do that. A new entrant essentially can build to what's required. And so they can streamline, they can move faster, they can respond more quickly. And so I think it's actually an opportunity.
Fair enough. Okay. So now I'm going to go by the panel one by one and ask, if anything, what keeps you up at night? Is it your systems crashing with over 3,000 entrants? But is there anything that's keeping you up at night these days?
It's not the system. In fact, we just did a pilot with about 50 different PSPs that registered. We're feeling pretty confident with respect to the system. Really, there is a small window for PSPs to register. And so really from now until November, the bank is trying to get the word out so that everybody really understands that this is important and what the timing is, and that's what keeps me up at night, because we want a successful registration period with most PSPs registering.
Technically, if you don't register, you have to wait 60 days after the 15th, isn't that right? To do anything? I guess you guys aren't going to be, that's how the law's drafted.
We will be super happy if you register day.
Okay, good. Okay, that is good
day
to okay.
17.
Good.
Yeah.
That is great to know. Hanna?
Yeah, it's, can you hear me okay? Yeah. It's not specific to Wealthsimple, actually. It's, I would say, the broader ecosystem, like the payments and fintech ecosystem. I'm seeing, a couple trends that are concerning. It's a difficult fundraising environment, obviously, right now. There's, we lack enablement partners in the ecosystem. So what I mean by that is like bank partners and other like banking as a service providers that enable fintechs to actually go to market. Getting a bank account, we're talking about this right now, is extremely hard if you're a money service business. Hopefully, like being registered as a PSP will give banks comfort. I think you need downward pressure, competition, and incentive to do that. So, I'm kind of on the fence as to whether that's going to be realized. And then, obviously you have more regulatory overhead that's coming into effect as well that might change business models, I think for the better and for the safety and soundness for Canadians. But I think that when you combine, these factors, it already puts a lot of pressure on an existing ecosystem that is an extremely hard place to operate, especially in Canada. So, I think that there is areas of opportunity, like you've spoken to, it adds regulatory clarity when you have something like RPA in place where international players can be like, okay, I already know what to do here. This exists in the UK, it exists in, Australia and Singapore. I can kind of more or less copy and paste my playbook and expand here. Hopefully that's what happens, and we also see, more players that are looking to enable other fintechs, and we can see innovative, solutions, because I think the payment, PSPs and fintechs, they are pretty critical, I think, and provide services that, the big banks have no interest in doing. They're often serving underserved segments, and so I think it's really important to make sure this sector continues to remain supported. I appreciate the Bank of Canada having flexibility around, we'll do a gap analysis and see where you're at, and hopefully you've made good progress. I think that's really important, especially given like these factors in this environment. So,
great. Catherine?
So what keeps me up at night is the month before registration. I just feel like October is going to be an interesting one. But I would say, and I said it earlier, it's the overbuilding. It's the not taking full stock of what you've already got and overlaying things on top of that. I don't think these are always meant to be additive. I think they're meant to be leveraging what you already have in place and then putting in what you don't.
Yeah, and I think What things that do keep me up at night, I think I take comfort from the Bank of Canada saying they're going to basically take a reasonable approach if you miss something, if you're not quite there, if you're a day late for registration. That sort of gives you a lot of comfort that it's not going to be this like, we gotcha. So that's helpful. It sounds like you want to work with industry, which is great and helpful for all of us because we're all learning as we go along. And so that's great. So I want to thank my panelists. That was great, insightful. Hopefully everyone got something out of it, and continue to enjoy your day. And the coffee's great, by the way, so help yourself. Thank you.